I'm going to tell you why leasing a car is a much better deal for most people rather than buying that very same car, especially when it comes to electric cars. Of course, there are exceptions to the rule, and we'll go over those as well. But for the rest of you, I think I can save you some money. So let's get started. Welcome to E4Electric, your number one source of electric car scoop. If you are interested in everything that's going on in the world of electric cars, you came to the right place. All you have to do is click on that subscribe button and the bell notification icon so you don't miss anything moving forward. First, let's get something out of the way, and it's the notion of people saying, I don't really want to lease a car because I want this car to be mine. I want to own this car. Well, first of all, you don't really own the car, right? Because most of the time you're going to finance it through the bank, and it's the bank that owns the car and then your financial future for the next 5 years. And I'm assuming that we are all on the same page that buying a car for cash is like literally the worst financial decision you can make for yourself, except for that exercise bike that's in your garage. And even if you do buy the car for cash and you own it, you own it until you don't when you sell it to the next person, and then oops, I just described a lease. Now, as I promised in my opening, let me go over some exceptions. There are actually 5 exceptions of cases when you should not be leasing your car and purchasing is your best option. Before that, a quick reminder that this video and this channel is sponsored by KANDI AMERICA. Have you met the most affordable electric car in America? Check out the K27 for a limited time launch price for under $10,000. That's right, after the federal tax credit, or their second model K23 for under $20. Deliveries start just in a few months, so make sure to reserve yours for just $100 refundable dollars before the price goes up by using the link in the description of this video. All right, so let's talk about the 5 exceptions of when you should not be leasing your car. Well, first one is very simple. If your credit score is not very good, then they simply won't let you lease a car. It should be in a top tier, which usually is 640 or higher. Number 2 is when you just love driving the same car for a long time. You buy one, you just kind of run it into the ground, and it lasts longer than your marriage. That's when you should probably buy it. Leasing is usually when you lease for about 2 to 4 years, which I guess is still a little longer than your average marriage in California. Number 3 is when you drive a lot, and I'm talking about over 15,000 miles per year. Usually that's the cap of how many miles you can put on a car every year when you're leasing. Now, if you do drive more than that, you will still end up paying for extra mileage, but generally speaking, if you're driving more than 15,000 miles per year, leasing is probably not for you. Number 4 is when you don't buy new cars at all. You only buy used cars, and you can only lease a new car. And number 5 is when you love to mod the hell out of your car. Change the wheels, change the seats, wrap it. You should not be leasing that car. You better own that monster. Now that we got that out of the way, and I believe the majority of the people will not fall into those categories, let me know if you do in the comment section. Let's talk how you can benefit, and by benefit I mean financially benefit, from leasing an electric car. Now, a lot of people choose to get new cars and then get rid of them after only a few years because they get the latest and greatest technology, the latest safety features, the roadside assistance, the warranty, the trouble-free car, and so many other benefits. Number 1 is very simple. You will save pretty much half of the sales tax when you're leasing a car. Let me give you an example. Let's take, I don't know, a $10,000 car. I don't know how that number got into my head. And let's say that the sales tax in your area is 9%. So you will pay $900 in sales tax on a $10,000 car if you're purchasing it. I know that because I am Russian and we are very good with math. And by the way, when you buy your car and pay the sales tax, it doesn't matter how long you're going to keep this car. Even if you sell it the next day, you still owe the entire sales tax, and it will be the next person who will pay the sales tax on the next purchase price. But if you lease that very same $10,000 car, you will only pay the sales tax on the amount of usage of that car. All right, so how do you determine this usage amount? Well, when you lease a car, you and the bank agrees to a price that the bank believes this car is going to be worth when you are going to be returning this car in about 3 years. That's your residual value, and the difference between the residual value and your purchase price is essentially the amount of money that you will be paying to the bank in those 3 years for usage of this car. And that's the amount on which the sales tax will be applied rather than the entire price of the car. Now, usually the lease term is about 3 years, and the residual value typically is about 50%. So if we're talking about a $10,000 car, the residual value will be $5,000. Therefore, the usage amount will also be $5,000, and therefore you will only pay $450 in your sales tax. And let me use my Russian mathematical skills and let you know that $450 is half of the $900 that we were going to pay on the purchase. And that's because the sales tax is applied essentially on just the half of the value. So in this case of a $10,000 car, you are saving $450 for no other reason but because you are leasing this car and not buying this car. But now imagine if you're buying a $50,000 car. That's 450 multiplied by, that's a lot of savings. Now let's move on to another benefit that only applies for leasing electric cars. I'm talking about the $7,500 tax credit that you usually get the next year when you do taxes after purchasing an electric car. Now, if you're leasing your car, you don't have to wait at all. The bank will be claiming this tax credit, and therefore they will calculate the $7,500 in savings right into your lease. So instead of waiting for your $7,500 sometimes over a year, you get these savings instantly. Now, I should mention that some manufacturers like Tesla and General Motors do no longer have the federal tax credit applied to them, and some of the other manufacturers are getting close to having theirs phased out over a period of a year. Number 3, and this is my favorite because you either get to save a lot of money or prevent yourself from losing a lot of money, and I'm talking about depreciation. And that's usually a big concern, especially for electric cars, because they are full of technology, and anything with high tech depreciates much faster. Sometimes a car can depreciate just because the economy went down. You might have bought your car when the economy was great and you were buying it at a relatively high price, but then in 3 years the economy goes down and all of the prices go down and your car ends up being worth less than you thought it would when you were originally purchasing it. All right, let's compare the same two $10,000 cars side by side, but one is a lease and another one is a purchase. And once again, let's go with a 50% depreciation on your leased car, so therefore the residual value is expected to be $5,000 after 3 years. Now, let's say in 3 years, this car is actually worth more than everyone expected because the economy is good, or this was a very successful model, and the car is worth $6,000. If you purchased it, you will sell it for $6,000, and therefore you paid $4,000 in 3 years to have this car. Now, if you were leasing this car, you were realizing that, I paid $5,000 to have this car for 3 years, but you only owe $5,000 to the bank, so you pay that, get the car out of the bank, you buy it out, and then you sell it for $6,000 because that's the market value. So at the end of the day, you also paid only $4,000 to have this car for 3 years. But, and this is a pretty common scenario, what if the car is worth only $4,000 after 3 years? Again, could be bad economy, could be that the manufacturer came up with a much better model with a longer mileage and better tech and so forth. So now it's just $4,000 after 3 years. Well, if you own this car, then you will only get $4,000 out of this car, again, market value, and therefore you paid $6,000 to have this car over the 3 years. However, if you were leasing this car, You already had a deal with the bank that all you owe to them was the $5,000 that you paid, and now it's their problem that they're stuck with a $5,000 bill on a $4,000 car. So this is the only time when the bank gets screwed by you. So if you leased this car, you paid $1,000 less than the person who bought that very same car. And once again, if we were talking about a $50,000 car, you would have been saving $5,000 for no other reason but because you leased. So that's a lot of savings, once again, for no other reason but because you chose a lease versus purchasing exactly the same car and keeping it for exactly the same period of time. However, I'd like to mention a few nuances that you should probably know about when you're leasing a car. First, if you decide to return your car at the end of your lease, there might be a small return fee, usually around $500, unless you're getting another car from the same manufacturer. In that case, a lot of them will waive that return fee and you'll pay zero. Secondly, when you're negotiating your lease, please negotiate the price of the car first. Make sure that all of the incentives and discounts are calculated, and only then negotiate the lease itself. And thirdly, never buy the car out of the lease to keep it. Only do so if you're just about to sell it because it's worth more than your residual value. All right, I hope I helped you save some money with your next new car. Looking forward to all of your comments. Other than that, see you next time, and remember to stay charged.